1 hour ago, Fidelity Investments bought Bitcoin for $41 million, but there are some secret bearish signs right now on the chart. So the question is, did they just bought the top, or are they preparing themselves for an upcoming rally? Let's analyze.
My crypto paradise.
Hello ladies and gentlemen of the Paradise Club, this is Simon from My Crypto Paradise. Welcome back, it's great to have you here. A new week ahead of us. Today is Tuesday, and as you remember, on June 10th, I've told you when Bitcoin was trading at around $109,000 that with the highest probability we are going down. As you can see right now, we have crashed perfectly by around 10%, ladies and gentlemen. With the Paradise Family VIPs, we have been strategically positioning ourselves. As you can see, on June 13th, we have been strategically creating a sell limit order at $108,000, and just recently, basically yesterday, we have taken a first take profit target exactly at $98,000. As you can see, a luxury entry with a beautiful risk to reward, very tight stop loss, and the target at $98,000 already hit. And right now, Bitcoin from this support is surging to the upside. And the question is, what's gonna happen next? Well, for that we need to analyze the market thoroughly again. So I will be taking that very easy today because I just want to share with you a few things. I will keep most of it on Thursday. As you know, I'm recording 3 times a week for you, Tuesday, Thursday and Saturday, and today there is unfortunately not that much of a time. So what I want to share with you is, first of all, fear and greed index, ladies and gentlemen. Our sentiment data is showing us that we are at 80. As you know from the previous videos, 20 is basically magical number, 80 as well, and right now we are extended at 80. Okay, dangerous. As you can see, the social index is creating loads of bullishness around retail, so majority is expecting that the price will continue to go to the upside. But if you take a look at the whales, they are not that positive, right? So this is first thing. A second thing that I will go back to is that right now we can see on the order book suit that there is some distribution of sell limit orders going on. All right, so this is going to be important to understand once we start analyzing the low time frame. Let's go back to chart for ultra high time frame. There is something very interesting happening right now, very important, but I will keep that on Thursday. Let's jump right into high time frame chart. As you know, for the first time since April, we have started to create 5 moves to the downside. As you can see, since April we have been only creating to the downside a corrective mode waves like a triangle or ABC flat, etc. Right now to the downside we have started to create 5 moves, all right, more complex wave structure, and this was actually a first actionary wave, motive mode wave from the price action development. This was a clear sign of a change of trend from bullishness into bearishness. It was confirmed afterwards that we have created to the upside a very corrective simple wave, AB zigzag, and that was also the reason why we have got rejection from our 1.618 Fibonacci retracement level that been sitting at around $109,000. Since then, we have started to create a third wave, ladies and gentlemen, that I do believe that will finish at $93,000 at around our key high time frame support zone. But there are some warning signs right now that we might go a little bit higher, and maybe this bearish price action can be invalidated absolutely totally. Because if you take a look at the MACD histogram, we are actually creating a bullish divergence. Why? Because the price action is creating lower low, ladies and gentlemen, but the histogram on the MACD indicator is creating higher low. If you are educating yourself inside of our MCP free university, you know exactly what I'm talking about. When the price action is creating lower low but the oscillator is making higher low, that means this is a classic bullish oscillator divergence, ladies and gentlemen, and the reversal to the upside and get away from the bear trend is much higher. As you can see, the momentum of bears is decreasing as well. Right now we have got the correction to the upside, and right now the question is this just really a correction or a new start of a new higher term trend? Well, we will answer that question. As you can see right now, it might be just a correction because to the downside we are creating the higher degree third wave. This was our first wave, secondary wave, and right now we are probably creating the third wave if there will not be any invalidation. As you know from the Elliott wave theory, how can you say that the third wave is being intact? You can say that by analyzing the subwaves, right? So as you know, the corrective mode waves are being created in 3 subwaves or variations of some triangles or double free, triple zigzag, etc. Basically corrective mode waves that you can see right here, and the actionary waves 1, 3 and 5 are subdividing itself into 5 smaller waves, and the third wave is always an impulse, all right? And the impulse has its own characteristics. For example, the fourth wave shouldn't exceed the top of the first wave, etc., right? So at the moment, what we can see is happening is that we are trying to start going inside of the price territory of the secondary and first wave. So this was our first wave, secondary wave, third wave, and right now we might be creating the fourth wave. However, what I don't like about this is that we are exactly going in the middle of the territory of the first and secondary wave, all right? We are in high volatile, low liquidity markets, ladies and gentlemen, so these kind of deviations can sometimes happen, all right? But if we will start reclaiming this moving average trend line, I will not like that, okay? So as you can see, the first daily candle closed above the moving average trend line. That is already decreasing the bearish momentum, okay? And now if we will start closing another daily candle above the moving average trend line, and also we will get rid of this point of control, this will be beginning to look bullish, all right? Together with that, we need to be careful about the stochastic RSI. As you can see, we have right now a bullish cross happening. So how can we go and get rid of this oscillator bullishness, because we are just getting out of the oversold area, is some kind of prolonged consolidation or a move to the upside, right? So we need to be careful about that. However, the bears can really be stepping out soon very aggressively as well. That is why we need to always wait for the confirmations, because if this is just a trap, this invalidation that we are going inside of the price territory of the first and secondary wave, the bears might be preparing a huge trap and we might be dropping very soon. That is why we need to start analyzing the lower time frames as well to understand the price action development deeper, right? So for that, we need to take a look what's going on also on the 4-hour time frame, on medium time frame price action. And right here, you can see a hidden bearish divergence. We will be talking about it. However, if you take a look at the subwaves of the first and secondary wave, this was a beautiful impulse, 5 moves to the downside. This was a beautiful zigzag that I have been analyzing for you through deeply on the low time frame chart. As you know, this was A, this was B, A that was made out of double free, and C impulse, a beautiful zigzag, ladies and gentlemen. And after that, we have started a new impulse lower, that if this is going to be intact and we will not be able to break above and reclaim the previous high, we will continue to go down towards $93,000, and then we will start to create and complete the higher degree impulse. That means the third wave will finish right here, then we will have a corrective mode fourth wave, and then the fifth wave will take us towards the 0.61 Fibonacci retracement level that is sitting at around $88,000. So right now on the medium time frame, ladies and gentlemen, we can see a hidden bearish divergence. What does it mean? It means that the MACD histogram is creating higher high, however the price action lower high, all right? So far it is lower high, and as you can see on our website, this is a hidden bearish divergence. Price action lower high, indicator oscillator higher high. This is a sign that the momentum is there, but somebody is distributing on that momentum, and this is exactly what we have been talking about in the beginning of this video, right? There is some distribution going on that is visible on the order book suite. So we need to be careful to understand that the whales are not really cheering for a price continuation to the upside and for a new trend. Continuation to the upside, I don't mean there doesn't need to be any spike to the upside. We can have a spike, but I'm talking about like 10-20%. What's going to be the next major move, all right? The whales are not really cheering for the price continuation just because of this reasoning, and also that the price action higher from our bottom at that we have taken profit at $98,000. As you can see, it was mainly created by deleveraging, because if you take a look at the open interest, it was all the time decreasing. That means somebody was closing short position and that automatically opens a long position, right? But from spot exchanges, some big volume, we have not seen that, and that is also the reason why we don't believe whales are supporting a new trend that will continue higher above the previous all-time high. So right now what we can see, a bearish divergence that is forming. It is not being confirmed just yet, okay? It's going to be confirmed while we start losing momentum. Right now we are not losing momentum, but something is cooking. Momentum is high, retail is pumping, but somebody is distributing and keeping the price below the previous high right here, previous local high. Together with that, stochastic RSI is starting to get into a bearish cross. We are already in an overbought area, so sooner or later we will need to cool down. The same way as on a high time frame chart, we can cool down by consolidation or drop lower. All right, so the medium time frame is already showing us some kind of bearish signs. Okay, so we need to be very aware of that, and as a professional traders, we need to be adjusting our trading strategies based on that. So definitely before confirmations, there is no aggressiveness in long positions or short positions right now preferable. It's definitely a low probability play to be right now playing it with high leverage and aggressiveness. All right, always wait for confirmations. That's the only way how to be consistently profitable and long-term successful in your crypto trading. So let's also have a quick look on low time frame chart, and right now let's analyze also the price action development from the Elliott wave perspective. This was our first wave, secondary wave, and then we have created the third wave that finished at $98,000. And as you know, the third wave is being an impulse, right? And it subdivides itself into 5 smaller waves. So we got first right here, secondary wave right here, third already finished right here, that subdivides itself into 5 smaller waves, 1, 2, 3, 4, 5. And right now it seems like we are creating fourth wave, ladies and gentlemen, but I don't already like that we are being in the price territory of the first and secondary wave. All right, so this seems to be like a leading diagonal or an ending diagonal, which is not preferable for the third wave. All right, so as I said, we are in a very high volatile, low liquidity market. So in crypto, these deviations can sometimes happen, but it's very rare, so we need to be careful. Okay, so if we analyze the price action development of this potential fourth wave, okay, it can either be a zigzag or a new impulse. All right, so let's have a look. So this is probably an A wave on lower time frames. We have been analyzing the 5 moves, so this is definitely a motive mode wave. Then a B wave, which is created by a flat ABC, right, running flat, and then right now we are creating the C wave or a new impulse. So it's either an extended C wave, ladies and gentlemen, or we are actually creating a new impulse. This was first wave, secondary wave, third wave. Right now we are creating a fourth wave. This is a fourth subwave in a triangle, and we are gonna have an uptick higher. Okay, so or this can be basically an extended C wave. It can still be a zigzag, even though it is lower probability at the moment, but it can still be a zigzag if we calculate it the way that this was the first wave, secondary wave, third wave, right now fourth wave, and then we will finish a fifth wave. Okay, because as you know from our website, the zigzag is also subdividing the C wave in a motive mode wave, and that itself is an impulse or an ending diagonal. Okay, and sometimes it can be much larger than the A and B wave. Even though it is much more rare, it is still possible. All right, so as a professional trader, you always need to be counting with all the ways possible of the price action development, and position yourselves only when the probabilities are on your side. So then you also need to understand when to go aggressive, when to go defensive. All right, so if this is basically right now a fourth wave, a triangle in both cases, even though this is a fourth wave of the extended C wave or a new impulse, ladies and gentlemen, A, B, C, D, E, all right? Probably right now we will start breaking to the upside. If you take a look at the depth of the triangle, put it to the breakout point, we will hit approximately $107,000, all right? $107,000 to the upside, and then it really depends what the Bitcoin will do next. I don't want to see nothing else than just a wick out. If this is just a corrective mode wave, if this is new impulse, ladies and gentlemen, we will probably stay here for a little bit. What I don't want to see is reclaim of all of these resistances that I have been talking about in the previous video. If you will have a break and retest successfully, it will be a successful reclaim after some low time frame, ultra low time frame confirmations like a double bottom pattern, etc., or some bullish engulfing candlestick patterns, and then I will be basically counting with potential reversal to the upside and new trend, all right? However, if this is just an overextended C wave, I want to see just a wick to the upside. I don't want that there to be too long. I don't want to see any reclaim indices, and basically I want to see a sharp rejection right after that, all right? And then the probabilities that we will start going down towards $93,000 will still be intact, and the probabilities will be high, and we will be positioning aggressively for this next price action development, ladies and gentlemen. So watch out how we will react on these resistance levels, ladies and gentlemen, and I will keep you updated on Thursday. Cheers.